Checking in now on Apple's third quarter results. They are just crossing the wires, and let me get those to you. So Q3 EPS 140 versus the 135 that was expected. Revenue up 5% to 85.8 billion. The street was closer to 84.46 billion. So beats there on the top and the bottom. Gross margin hangs in there, 46.3%. That was better than expected. Turning to the segments, iPhone 39.3 billion. The street was closer to 38.95 billion. Services 24.2. Estimates were close to 23.95. Mac up 2% to 7.01 billion. iPad up 24% to 7.16 billion. Wearables, home and accessories 8.1 billion in the quarter. Finally, Greater China 14.73 billion. Estimates had called for something close to 15.26 billion. I did have the chance, Julie, to speak here with CFO Luca Maestri. Let me bring you Maestri's comments. Overall, he would characterize this as a very good quarter. It was a June quarter record, he said, on the top and bottom lines. By segment, he said iPhone revenue did actually grow when measured in constant currency. He also called out the installed base of iPhones, set a new all-time record, so that's important. He's referring there just to the number of active iPhones in people's hands all around the world. Of course, let's also talk about China, which missed expectations. Luca Maestri telling us, listen, we're seeing positive. One, he said business is improving as we kind of move through this cycle. In constant currency, he said the decline was actually less than 3%. So he's saying currency playing a factor there. All-time iPhone install base record there, he told me. Top 3 models in urban China were iPhones. They feel good about the business. Guidance, we know, will come on the call. Luca Maestri will give a forecast, at least color and commentary at that point.
It was very interesting to watch the stock reaction as you were speaking, because it was kind of bouncing around between positive and negative. Now it's a little bit more solidly positive here. Something to point out, just context-wise, when we look at the big picture for Apple, this is a rebound in sales growth, right? Because the company's sales had fallen for 5 of the past 6 quarters. So that 5% gain in sales, better than the 3% that was estimated, you know, that's got to be a relief for the Apple bulls out there. So that's something to point to. Of course, as you say, the forecast is going to be really important. And of course, to beat the drum, anything they say about AI and how AI is going to inform their next iOS, how it's going to inform demand for their devices going forward. It feels like that's really the other item that the street wants to get more clarity around.
You can bet on that call, analysts are going to be all over that, trying any which way to get some commentary there.
Will they get any? We'll see.
We'll see. One more issue here, you know, capital expenditures, Julie. Just want to touch on that because there's a lot made. Apple's big tech rivals are obviously spending a lot on CapEx, building out these data centers to host AI services. So I asked Luca Maestri, just how are you thinking there in Cupertino about CapEx plans, especially to capitalize on the AI opportunity? Luca Maestri telling us, listen, we've announced Apple Intelligence. We've made all the investments we need to. We're going to continue making investments. He also reminded us that people compare us to these other big tech companies, but he pointed out, listen, we have a different business model and operating model. It is a hybrid, he reminds us. We do a lot of work in our data centers and partner, though, with others and use on their data centers. So he's just knowing the differences here between himself and others. People excited about Apple Intelligence. It is another reason to upgrade the iPhone, he said. Yeah. All right, let's get some more immediate reaction on this. Let's get to Tom Forte, Maxim Group Managing Director, Senior Consumer Internet Analyst. Tom, Apple's results are out. Let's get your quick take on the report. What do you make of it, Tom?
So for the June quarter, I would say it was a net positive with upside on both top and bottom line and better than expected results on the iPhone. So if there was one negative in the June quarter, it was, as you pointed out, that the revenue performance in China was weaker than expected. I do think, though, that investors are going to be hyper-focused on the September quarter outlook. If you look at the June quarter, when they gave their outlook, they did not actually give an outlook for iPhone sales. They talked about top line being up low single digits. They gave some color on services and iPads, but they didn't give specific outlook for iPhones. So with the expectation that you're going to have an upgrade cycle on AI, I really look forward to their commentary on expectations for September, especially for iPhones.
And what specific, do you think, as you say, we didn't necessarily get all of that color before. What are you expecting to get from Apple, and how do we, it's almost like the J. Powell game. Like, how do we read between the lines of what they say?
So I think the ultimate story for Apple is that there will be an upgrade cycle for iPhones, which is still the most important product, half their revenue. The question is, how quickly will that start? Because there were headlines recently suggesting that they're going to have new hardware for consumers, assumingly in September, but they may have to wait for a software update to get Apple Intelligence to work. So how quickly are they going to see this upgrade cycle for AI? And I think they'll give us enough breadcrumbs to have a sense after they report after the earnings call.
Tom, you often hear bulls say, listen, a lot of this just comes down to Apple's installed base, the number of active devices in people's hands all around the world. In fact, Apple is saying their installed base of active devices reach a new all-time high in all geographic segments. And bulls, Tom, will say, listen, there's a lot of folks out there on relatively old devices, and they're looking for a reason to upgrade. And so Tim Cook's going to come to the stage in September. He's going to show you that new iPhone, faster processor, better camera, hey, some new AI features too. And the optimistic take is there's just so many people who are looking at this point. They're sitting there with a phone that's 2, 3, 4 years old, Tom, and they're encouraged to upgrade, and they're going to have all the reason they need to upgrade. What do you say to that argument, Tom?
So here's, I guess, why I have a hold in the stock, because you're looking at a PE north of 30 times versus the big tech peers at more like 27.5. And when you compare the iPhone trends before the 5G, there was actually a lot more pent-up demand for new iPhones leveraging 5G networks than I believe there's pent-up demand for artificial intelligence. So yes, I think you have a lot of devices out there that are in need of upgrade. The other challenge is regulatory. So when you look at Europe, which is about 25% of revenue, and China, which is about 19% of revenue, it doesn't appear that they're going to be able to launch Apple Intelligence anytime soon. So I think there's pent-up demand, a lot of consumers with older devices, but I don't know that we're going to see an immediate unlock with the iPhone 16.
And you mentioned China. Of course, even though Luca Maestri did tell Josh that things in China are trending better, the number itself did miss estimates last quarter. So what do you make of that?
I think China is still something we need to monitor closely. If you remember last quarter, there were a lot of press reports suggesting that things were materially weaker in China than they actually were. So I think China's holding up reasonably well. I look for additional details on the earnings call. But, again, I think the challenge will there be a major upgrade cycle if they can't have Apple Intelligence in China?
Tom, always great to have you on the show. Thanks for that instant reaction and analysis. Appreciate it.
Thank you.
Still to come, the earnings bonanza rolls on. We're going to get you the latest from Coinbase, Block, and MicroStrategy. Stay tuned. More Asking for a Trend on the other side. A sharp sell-off on Wall Street as recession fears spook the markets. Let's get to Yahoo Finance's Josh Schaefer with the trading day takeaways. Josh.
Hey, Josh. Yeah, we had a big sell-off in markets today, and that really started off some economic data that we got this morning. So I want to dig into that here. Going to pull up a couple charts for you guys. So what we're starting with here is U.S. manufacturing activity. This was out from ISM at 10 a.m., and we saw the weakest manufacturing activity. You can see it coming down here that we've seen since November 2023. This was not a good sign, according to economists. You also saw within that index the employment index, so how many people are being employed in the manufacturing sector, ticking down significantly in the month of July. And then sticking with employment, we're looking at initial jobless claims here. So this is the amount of Americans that are applying for unemployment benefits in a given week. That ticked up more than expected. You can see a pretty clear trend here that we've been seeing moving higher. Weekly jobless claims hitting its highest level in 9 months. Now this, guys, basically sparking what we saw, if I can go back to my second takeaway here, that rate cuts aren't necessarily helping some areas of the market that we had seen. This is expectations for rate cuts. So we had that weak data that gave us a big move down in rates, but because that is coming from weak economic data, the market did not really take that in stride. A little bit of a shift from what we've been talking about overall with rate cuts. Of course, in the past, investors have been viewing rate cuts as sort of a positive for the markets.
And then, as we see what's going on here today, Josh, what else are you watching? Usually you have three things.
Yes, we do have one more thing, Julie, and I cheated and I used the earnings that we've been talking about all afternoon because I want to steal one of your points that you made, Julie, that I thought was rather important going into tomorrow. So we've had just a divergence in big tech earnings over the past week and a half now. So you have some companies that have been received well, some companies that have been received a little worse. You look at Microsoft was off a little bit the other day. Alphabet wasn't necessarily loved to a full extent. Apple is up about it's just barely positive, and now it's negative after they just reported earnings. We're looking at Amazon down 6%. And I guess what I'm sort of getting to here, guys, is when you have a market sell-off like this, you would sort of look to the earnings reports after hours to maybe instill some more confidence in investors headed into tomorrow, headed into this jobs report. We are not getting a clear picture of that in the after hours action today, so it'll be interesting to see how that sort of plays out. But there was perhaps feeling that maybe corporate results could give us a little bit more confidence headed in tomorrow, and that is just not the picture we're looking at this point.
It's interesting, Josh, because the stories, they're sort of just, in a sense, people kind of picking their spots. Like Meta had, pop today, looking like 5%. I thought Dan Gallagher over the Journal, he had a good post about how, if you were to kind of pull back the chart, investors have usually given Zuckerberg some leeway as long as the core business holds up and, you hold other costs down. It's just interesting how, there was the big AI trend and theme and hype, and now maybe, seeing some possible evidence that investors are becoming more discerning.
Yeah, Josh, just looking at Meta's trading action throughout the day today, you mentioned normally they see a little bit bigger of a pop. The stock was up 8%, right? When did it start coming down? It's when we talked about sort of that overall market shift at 10 a.m. And so really the stock was a little bit resilient. It wasn't the big move that we might have normally seen. But for Meta to be up 5% on a day when, again, we look at the rest of the NASDAQ 100, one of the only large cap stocks in the green for the day, it showed a little bit of resilience. So it'll be interesting to see how that carries forth after we hear calls from Apple and Amazon headed in tomorrow.
Josh, thank you. Appreciate it. More earnings coming across the wire from Coinbase, the company reporting better than expected second quarter revenue, the stock edging higher just by 1.5%. Now, a couple of things to note here. Revenue was up more than doubling, in fact, year over year to $1.45 billion, which was ahead of estimates. But the company also highlighted what happened quarter over quarter, that it fell 11%, and that's largely because crypto was down quarter over quarter, right? It peaked earlier in the year and then saw some declines over the course of the quarter. So the Coinbase points that out here, does point out that operating expenses also rose quarter over quarter. So that's something to highlight as well. Trading volume, $226 billion. That did beat estimates. It looks like both on the actually retail trading volume, a little bit short of estimates, but more than it made up for by institutional trading volume, which is quite interesting here. In the third quarter, subscription and services revenue going to be $530 to $600 million, comparing with an estimate for about $565 million.
Yeah, we were talking about this off camera, Julie. They also take a beat and emphasize what they say is extraordinary strides in achieving regulatory clarity, which they say serves as a vital unlock for Coinbase and the broader crypto economy. So they're going to continue driving this forward through the fall elections and beyond. And of course, we talk a lot about this, how really politicized the asset class has become, or at least certainly such a discussion point in this election.
Yes, most definitely. Let's get to some other sort of crypto adjacent numbers, shall we? Specifically in fintech, Block and MicroStrategy, both reporting their second quarter results. We've got a mixed reaction. Those shares, MicroStrategy not moving much. You could argue it probably moves more on crypto than on the results themselves, perhaps. And Block shares up about 4.4%. So for more, we're bringing in Mark Palmer, Managing Director and Senior Research Analyst for FinTech and Digital Assets at Benchmark. It's good to see you, Mark. So as we look at these numbers here, let's start with Block and kind of what stands out to you.
Yes, good to talk to you, Julie. This was a better than expected quarter for Block pretty much across the board. And while the company did have a headline revenue miss, most of that can be attributed to Bitcoin revenue. And frankly, I think that the street failed to make an adjustment for the fact that, as you mentioned a few moments ago, crypto and Bitcoin were down during the quarter. Beyond that, the company really had a solid quarter, both in terms of top line and especially in bottom line. Adjusted EBITDA, adjusted operating income, adjusted EPS, all solid beats, and the company raised its estimates for the year across the bottom line. In the past, Block had been much more of a top line story. It's really become a bottom line story, and we're seeing the impact of the company's ability to create operating leverage and drive that through its whole system. With that said, this stock has been lagging. It's down something like 23% year to date, but the operating performance continues to be solid. The outlook is strong, and so we think that Block is a good buy at these levels.
Mark, we were talking about Coinbase earlier. I know you don't cover that name, but just get your thoughts on Bitcoin generally. I'm obviously up so very strongly this year, Mark. Those new ETFs sparked so much enthusiasm, but then kind of cooling since hitting that record in March. And I'm just curious, Mark, where you see it headed in the near to just kind of intermediate term.
Yes, I think we're bullish on the outlook for Bitcoin. And of course, we have a buy on MicroStrategy, which reported today after the close. The underlying dynamic here is really one in which the Bitcoin halving, which occurred in April, still, in our view, has created a nice setup for Bitcoin's price going forward. Typically speaking, after a halving, and there have been 4 of them, the one in April was the 4th in the history of Bitcoin. There's a significant rally over the next year and a half or so in the cryptocurrency. We've begun to see a little bit of that, but it's been a muddled path. And I think part of that is technical. We had some large amounts of Bitcoin that were set to be sold into the market, a large chunk of that coming from the disbursements coming out of the Mt. Gox case from long ago. So it has created more near-term supply of Bitcoin in the market. But bigger picture, we think it's just a question of time before more institutions begin to adopt Bitcoin. I mean, on the pension fund side, we've seen 3 large entities that have gotten involved. The state of Michigan, the state of Wisconsin, and Jersey City, New Jersey have all invested in Bitcoin, spot Bitcoin ETFs. You're seeing a lot of tire kicking going on out there among institutions. It takes some time for a pension fund to arrive at the choice to add Bitcoin to its holdings. But again, these spot Bitcoin ETFs were only introduced to the market in January. We think that this is a trend that is going to be long lasting.
Just quickly, I wanted to ask you about something else that Coinbase mentioned in its statement, which is what it says that Coinbase and the crypto industry made great strides towards achieving regulatory clarity in the U.S. I don't know where they're looking at that regulatory clarity, because I don't see that regulatory clarity. Do you?
I think it's been showing up at least on the margins. And I think it's also a relative thing because the past few years we've seen the U.S. government and the SEC in particular, really cracking down on the space, including what was known as Operation Choke Point 2.0, where it was very difficult for any company involved in crypto to get access to the traditional banking system. But we've seen a couple of big developments. One is, as I mentioned, the approval of the spot Bitcoin ETF in January. More recently, the approval of the spot Ethereum or Ether ETF, and also even in the SEC's proceeding against Coinbase and some of its other proceedings, it has taken a step back and has refiled its motions so that it is stating to the court that a wide range of different cryptocurrencies, which it had previously said were securities, should not be characterized as such. So these are modest steps. They may, frankly, be driven to some extent by what's going on in the political realm, where you do have a large portion, or it's actually a large number. The portion's much smaller. It's something like 14% of Americans who hold crypto. But still, that's an important constituency. And I don't know that either one of the major parties wants to alienate those folks right now.
Right.
Mark, great to have you on the show today. Thanks for taking the time to join us.
Thank you.
Coming up, we're going to get you caught up on a few more tickers that are moving after hours. More Ask You for a Trend on the other side. Let's take a look at what's trending after hours. Shares of Roku jumping after hours following a beat for the second quarter revenue as the streamer benefited from strong ad sales. Streaming hours for the quarter grew 20% year over year, while active customer accounts jumped 14% in the same time. Guidance for the third quarter came in line with the street's estimates.
Shares of Twilio higher after beating across the top and bottom line in the second quarter. The company's forecast for the upcoming quarter also a bright spot. Twilio sees adjusted earnings per share for the third quarter in a range of 81 to 86 cents, well above the Bloomberg estimate of 72 cents. The company did narrow its full-year organic revenue guidance to 6 to 7% versus the previous 5 to 10%.
And DraftKings announcing Q2 earnings. The sports betting platform reporting revenue of $1.1 billion, just under Wall Street estimates of $1.11 billion, and a miss on adjusted EPS at 22 cents versus an estimate of 25 cents. DraftKings boosted its revenue guidance, though, for the full year. Guidance beat the average analyst estimate. And that is a wrap on today's coverage, and what a day that was. One last check here on some of the earnings we broke earlier, including numbers from Apple, Amazon, on Intel. Apple's call going on very soon here, in which, of course, investors will be focused on what guidance Tim Cook and Luca Maestri have to offer.
And in Amazon, really the focus is going to be on for that third quarter guidance. Why is there this expected revenue and operating income shortfall? What are the inputs to that, and why is that going to be happening? And of course, all of this could be moot in terms of the stock action when we get the jobs report tomorrow morning at 8:30. That's going to sort of sweep the macro narrative away, but it is interesting to see pressure on many of those big companies that reported, with the exception of Apple.
For sure. All right, be sure to come back tomorrow, 4:30 p.m. Eastern, for all of the latest market moving stories affecting your wallet. Have a great night.